Looking at the NSE All Share, I mean, it was down almost 1.5% in yesterday's session. What attributed to these losses? I mean, we saw quite a few losses coming through all round, mostly the banking sector, though. We also had some negative comments coming through from Eleni Giokos, of course, the National Security Advisor, about the central bank's role in the financial sector and whether this is going to create havoc in Nigeria's economy as a whole.
Yes, the banking sector is about 60% of the stock index. So when the banking sector goes down, it generally drags the whole stock index down. I think there's uncertainty over the banking sector because of the comments from the National Security Advisor, as well as the fact that only 4 banks have released the results. The deadline was the 1st of March. Only 4 banks have released the results. And the back of First Bank's results, which were not that good, compared to the Zenith and GTB Bank's results, I think there's a bit of uncertainty in the banking sector, and that's what's pushing the market down.
Well, let's just look at First Bank that came out with results yesterday. As you alluded to, we had pre-tax profit for the 9-month period hitting 11.58 billion naira, turnover sitting at 196.4 billion naira. Your view on this bank, and of course the fact that the dividend wasn't as expected. They were hoping for more. Investors were hoping to see more from this bank.
Yes, I think, to be honest, I don't think the dividend has been much of a surprise. First Bank, according to rumors, is interested in acquiring or merging 1 or 2 of the banks that have been rescued by CBN. So it makes sense for them to conserve cash at the moment for M&A activity. So I was actually surprised they actually did a dividend. I think it was pressure from the fact that Zenith Bank and GT and UBA announced a dividend that First Bank decided they were going to announce one as well, albeit quite small. I think First Bank's strategy really is to consolidate its domestic hold, and as they said, the strategy is a 3-step strategy: consolidate domestic hold in the next 2 years, then move into planned regional expansion, and then move across into international footprint. I think that's what they're trying to do. They're trying to transform their business and also grow, especially in the investment banking and asset management space.
Well, given that they are planning to transform their business, and they have said that although they operate in Britain, France, South Africa and China, they are going to be focusing on local operations. They're talking about consolidation, of course, in terms of the local operations. But do you think it's going to be convincing enough for investors, and that we'll be seeing some gains coming through? Or do you think investors will be waiting to see more details on this new strategy?
I think investors will be waiting to see. I mean, First Bank have a new MD. He only started in, I think it was April 2009, and he's put his team together, and they've enunciated internally a new strategy going forward. I think investors want to see more detail on that strategy because there's still rumors about this supposed planned merger with EcoBank, or ETI, which has been going on for about 2 or 3 years, but nothing really has been seen. And so they want to know clearly what the strategy is, who the new key people they're going to bring in or promote internally to drive the strategy for them to be convinced about it. I think at the moment, the investors are unconvinced.
Zenith Bank also came out with results earlier in the week. We had earnings up 5% from a year earlier, profit before tax a gain of 12%, and it seems investors are liking these numbers. We're seeing Zenith not trading in negative territory but holding on to some of its gains.
Yes, Zenith Bank, the results, the Q1 results were pretty good. What we're seeing in Nigeria and the banking sector on the whole is net interest margins should be increasing. I mean, the retail deposits rates have gone down at a significant rate, while the lending rates haven't gone down to follow it. So banks that have cheap retail deposits and are lending to the corporate sector should have healthy net interest margins, and that's what Zenith's strategy is, really, to get cheaper retail deposits and lend to the large corporate sector. And we're seeing that in their profits, that they're taking advantage of this in the market.
You were talking about a lot of the banks missing their deadline on the earnings front. Apart from that, we know that the Central Bank of Nigeria also has a big focus on regulatory changes regarding margin loans and, of course, funding for securities as well. Give us an indication of how it's been taken up by the banks and what kind of impact it's going to have on Nigeria. We're also hearing that the property sector seems to be suffering somewhat because of the overhaul in the financial market as well.
Yes, the current reforms in the banking sector are affecting the economy in certain ways. The banks have actually apparently retracted from lending. The growth in lending in the Nigerian market has decreased significantly from the 2008 figures. I think the growth lending to the Nigerian economy sector was about 55% growth in 2008 and is dropped to single-digit figures at the moment, according to latest CBN results. So all sectors of the economy are suffering from that. I think banks are reluctant to lend as they overhaul their risk management structures and take into account the raft of CBN reforms and new policies that are coming into place and how they're going to comply with them. I think that is really the issue. I think the issue on margin lending was expected by most of the banks, and the CBN just really confirmed what most of them were expecting, so it shouldn't be too much of a surprise.
We've also seen an oversubscribed bond coming through from Lagos. 57.5 billion naira is what was raised, an oversubscription of 249%. So that's an incredible amount, just really showing that investors have great appetite for debt coming through from Lagos.
Yes, what we're saying is the banks have high liquidity, and they're basically piling into any investments that gives them a decent yield. FGM bonds, 20 years, about between 7 and 8%, which with inflation running at 12%, is not really that good a deal. Any treasurer who's buying heavily into FGM 20-year really shouldn't be doing that at the moment with those kind of yields. So something like Lagos State 7-year, 10% coming out is very attractive. I'm a bit surprised that they only, with book building allowed and being able to tap into the market, that they only wanted 50 billion. Because with that kind of oversubscription, they could have probably raise a lot more money. But because they only asked to raise 50 billion, under SEC rules, they're only allowed to do 15% oversubscription, so they were capped at 57.5 billion. I'm sure they are wanting to do more, especially at a 7-year rate of 10%.